Welcome back, guys. Previously we had a welcome message for all traders around the world. So this time we're going to be looking at our charts. We're going to our chart breakdown as soon as possible. We'll be looking at few pairs, which gold is the number one. So we'll be looking at gold today. We're going to break down gold chart today. So let's dive into our screen. Yes, sir. Okay, so this is the H1 time frame. Let's go to the bigger picture, which is the monthly time frame of gold. These are monthly time frame. It's very charming. So start by clearing every drawing here. So for gold, the lowest price touch of gold is around $200, right? Then another place is around 1050, right? Around 1050, 1050. This was another place price touched, came back, pushed ahead, came back again and tested it. So it's a psychological level, so to speak. Then we have this level. This level is a strong one, and this level also, they are very significant to the gold chart. So this is in a nutshell. This for the monthly time frame. We have a bullish momentum, a retracement, then a bullish pullback up. We had a double top, which we are going to be seeing in the next chart or in the lower time frame. Then the double top didn't break, didn't succeed in pulling down from the neckline. So it's going back to the upside. So we are bullish on gold. Let's check the lower time frame for clarity. So after this mark up here, we stopped at this level around 1920 or thereabouts. Formed a little bit of a double top, or let's say triple top here, and push down lower all up to $1,050. So it went up, it encountered a resistance of around here, around 1,350 points. So after this resistance, it went down a little bit, formed an inverse head and shoulder. This is the shoulder, this is another shoulder, this is the head. Went up to the neckline, this is another, the left shoulder, this is the right shoulder, and it broke again and moved to the upside. This could be our entry point if we are in this market, but it didn't go down to our entry point. This is our entry too. Respected it and then move up. So have to take note of the double top here because it's a little bit clear around 2,750 or 2007. around $2,770. So this is where the double top happened. Let's adjust this to the low. So this is where the double top happened. Instead of moving to another higher high, it's created this structure and started pulling down, right? And from this point, we knew price was going to move a little bit down, and we had multiple down or bearish positions around here, but we expected price to come validate the neckline, which didn't happen. It started going up. So why did it start going up? Let's actually understand from the daily time frame. Let's see the recent price movement. So after price got to this touch, went down, formed a little bit of a ranging markets, went up again, and validated this structure, which is the double top structure, and started going down, forming this little trend here, this little bearish trend around here. So price also had a little bit of a support here, right? Which is the neckline. This should be our neckline. If drawn properly, this should be our neckline. So price didn't respect the neckline. It was supposed to pull back a little down, then come back to respect the neckline. So I will keep heading lower, but that didn't happen. Remember, we took multiple sell positions here. Why? Because we saw a double top and price didn't actually move higher above the previous structure. So we suspect a change of trend in place and saw a double top here, which also activated our downtrend bias. So we took some sell position here, here, and here. Then price came down here, formed a triple bottom, but it's not going to be visible until go down to H4, right? For a time frame. So this was kind of a downtrend from the H4 perspective. This was the downtrend. This was the first touch. This was the second downtrend touch, and this was the third. So keep it at this low. So price formed an impulsive move down, a correction, impulsive down, a correction, impulsive down, a correction, but didn't form another impulsive. This was the double touch and went up, came down again, pushed this, formed the triple bottom. This was double bottom. This was triple bottom. Price moved a bit higher. This is the major psychological level, and it's supposed to be our entry point if price actually went down a little bit. I know you've been thinking the same thing. Maybe you have this structure. This was supposed to be our first entry point. Had it been price retraced to this level, or since it didn't retrace back to the level, it didn't retrace back to the level, we are still good. So it's supposed to be our first entry level. Let's just mark that up. So anytime price comes up to that level, you're going to be taking our buy position somewhere around here. Then our take profit around this level is a massive risk to reward 10 ratio, 10 risk to reward ratio. So when this didn't happen, it formed a neckline around here, a neckline around here, right? Right, formed a neckline around here. But came back to retrace a little bit. The structure wasn't complete. It went up again. right? So we have another resistance stopping price around here, right? Price came here and touched it multiple times, right? And moved up a little bit more. So what is our bias in gold? Gold is bullish from the higher time frame perspective, but is trapped in a range from the daily time frame. And in H4, we had a downtrend which has been violated and has given us a price pattern, which is the triple bottom structure. So it's heading up to 1,920 or thereabouts, and the highest price touch of this level. Okay, before the highest price touch, we have somewhere around 2,000, right? Somewhere around 1,999. Let's say 2,000. Somewhere around 2,000 for another target. Then the highest price touch 2,070. These are all our targets we set for gold. From levels to levels, we're going to be looking at them. But for now, we really had expected price to come down to activate this danger zone. This was a really danger zone for gold. So our first trap actually. Had it been it touched this level, we should be smiling to the bank now. But when that didn't happen, we expect price to violate this level, then give us another zone for us to go more bullish. So we can go down to H1 and concentrate on this movement of price and this recent price movement. So here, we expect price, we expect gold to break this level. It's already doing that, but we expect a more bullish momentum to the upside somewhere about here. Then it will come back to this zone to come back to activate our levels. So somewhere around here. But now we've not seen our bullish danger zone yet. We are still waiting for price to move a little bit higher, then come back to this level, forming a bullish momentum before we can actually take this position. If that didn't happen, we look for price to break this minor trend line, this minor trend here, then come back here to activate our orders. But for now, we still think this will go as we expected. We are 70% bullish on gold. 30% is still a short mark, but for now, our conviction is to the upside. So in a nutshell for gold, in a higher time frame perspective, gold is still bullish. In a higher time frame perspective, gold is still bullish. In the daily time frame, it's still in a range. It invalidates the double top, and it's going back up to 50% of the previous double top structure move. So we still have a bullish intention on gold, right? But now we are waiting for it in the H1 time frame for it to break the previous resistance and show us a real bullish mark for us to go to the upside. Before it happens, we are going to sit on our hands and wait for things to get more clear for us on gold, right? So this is it in a nutshell. Thank you for your time. Remember to subscribe, remember to comment. If you have a different bias, you can put it in the comment section. It might be right, but for now, I have a really strong bullish conviction on gold. So when everything plays out, I'm still going to come back to the channel and tell you the outcome of our good setup. So keep subscribing. Come back. We're going to be putting something like this in our channel from time to time. Make sure you click the bell notification bell to get notified whenever I drop a jam video. So our next lookup will be on Euro USD. You don't want to miss that analysis. It is bomb, to be honest. You need to come back. So make sure you subscribe. Make sure you on your bell notification bell to get notified. Thanks. Peace. So thank you for your time. Thank you for staying out to the end of the video. I love you.